Stop whatever you're doing right now. I mean it. Put down the coffee, close the other tabs, and look at the calendar. Do you see that date approaching? February 1st. To most people, it looks like just another Sunday, just another day in the dead of winter. But for you and for anyone who is awake to the reality of the financial system, that date represents a steel door slamming shut. It represents the end of an era of easy access. You know that sinking feeling you get when you realize you missed the last flight out of a city before a storm hits? That pit in your stomach when you realize you had the time, you had the money, but you just waited one day too long? That is exactly where we are standing right now. We are standing on the tarmac, and the engines are revving, and the gate is about to close. You have a very short window of time left to make a decision that could define your financial security for the next decade. This is not hyperbole. This is not fear-mongering. This is about reading the fine print of an executive order that is about to ripple through the global supply chain and freeze the flow of the one asset you need most. We are talking about silver, and we are talking about why, after February 1st, getting your hands on it might become a luxury you can no longer afford. Let's talk about the elephant in the room. We are living through a period of aggressive economic nationalism. You hear about trade wars on the news. You hear about tariffs on steel, on aluminum, on Chinese electric vehicles. And you might think, well, that doesn't affect me. I don't buy Chinese cars. But you are missing the bigger picture. The trade war has mutated. It is no longer just about protecting American manufacturing. It is about reshaping global capital flows. And the latest target, whether intentional or just collateral damage, is the silver market. The incoming administration has signaled, with crystal clarity, that a new tariff regime is beginning. Specifically, a 10% tariff on imports from a list of European nations that includes the United Kingdom. Now, you might be asking, why do I care about a 10% tax on British goods? I buy American Silver Eagles. This is the dangerous assumption that will leave thousands of investors empty-handed. You have to understand the plumbing of the silver market. London is not just a city in England. In the world of precious metals, London is the heart. The London Bullion Market Association, or LBMA, is the central nervous system of global silver liquidity. The vast majority of the physical silver that flows into the United States does not come directly from a mine in Nevada. It comes from the massive vaults in London where it has been stored, refined, and aggregated. It flows from London to New York to fill the COMEX vaults. It flows from London to the private mints that strike the rounds you buy. It is the main artery. And on February 1st, the United States government is preparing to put a tourniquet on that artery. When you slap a 10% tariff on silver coming from the UK, you are not just raising the price by 10%. You are breaking the mechanism of the market. Think about the margins in the wholesale metal business. They are razor thin. We are talking about pennies on the ounce. Wholesalers move massive volume for tiny profits. If you suddenly introduce a 10% cost at the border, who eats that? The wholesaler cannot eat it. They would go bankrupt in a day. The refinery cannot eat it. So, one of two things happens. Either the cost is passed entirely to you, the end buyer, meaning an immediate and violent jump in premiums. Or, and this is the scarier scenario, the metal simply stops moving. The importers look at the risk, they look at the cost, and they say, no thanks. They stop ordering from London. They wait to see if the policy changes. They wait for clarity. And while they wait, the supply chain dries up. The shelves go empty. The out-of-stock signs start popping up on every major dealer's website. This is what I call friction. The government doesn't have to ban silver to keep you from having it. They don't have to come to your door and confiscate it like they did with gold in 1933. That is the old way. That is the clumsy way. The modern way to control a population's wealth is through friction. They just have to make it difficult. They have to make it expensive. They have to make it bureaucratic. By imposing this tariff, they are throwing sand in the gears of the free market. They are creating a situation where only the wealthiest, most connected players can navigate the new rules while the average person is left standing on the outside looking in. You need to understand the difference between a price problem and an availability problem. Most people obsess over the spot price. They watch the chart all day. Is silver up 50 cents? Is it down 20 cents? That is a price problem. But what we are facing after February 1st is an availability problem. An availability problem is when you have the money, you are willing to pay the price, but there is simply no product to buy, or the only product available carries a premium that makes no mathematical sense. Imagine going to the gas station during a hurricane. The sign says gas is $3 a gallon, but the pumps have plastic bags over them. Does the price matter? No, the availability matters. The disconnect between the paper price of silver, the number you see on the screen, and the physical price of silver is about to blow out. The paper price is determined by trading futures contracts on the COMEX. It is a digital game played by banks. But the physical price is determined by supply and demand in the real world. If the supply from London is cut off by this tariff, the physical market will starve. Dealers will scramble to find metal. They will bid up the price of the limited inventory that is already inside the US borders. You could easily see a scenario where the spot price is $30, but the cheapest physical ounce you can find is $45 or $50. That is a 50% premium. That is the market telling you that the paper price is a lie. And if you wait until February 2nd to buy, you will be buying into that lie. But there is another player in this game that makes the situation even more desperate. We are not just talking about investors like you and me. We are talking about industry. We are talking about the giants. The green energy revolution is built on silver. You cannot build a solar panel without silver paste. You cannot build an electric vehicle without silver contacts. You cannot build a Tomahawk missile or a server for artificial intelligence without silver. These industries are what economists call inelastic buyers. That means they don't care about the price. If Samsung needs silver to build millions of phones, they will pay whatever the price is. They cannot stop the assembly line because silver went up 10%. It is a rounding error for them. So, when the tariff hits and the supply from London tightens, who is going to get the first call? Who is going to get the metal? Is it going to be the local coin shop in your town? Or is it going to be Tesla? Is it going to be the defense contractor Raytheon? It is going to be the industrial giants. They will use their massive capital to sweep up the available supply, absorbing the tariff cost because they have no choice. They will drain the swamp, and you, the retail investor, the person trying to protect your family's savings from inflation, you will be left fighting for the scraps. You will be competing with billionaires and governments for the leftovers, and you will lose that fight every single time. This is why the date February 1st is so critical. Right now, as I speak to you, the supply lines are still open. The old rules still apply. The inventory that is currently in the warehouses was imported under the old regime. It is priced for the old world. But once that inventory is gone, every new ounce that comes across the ocean will carry the new price tag, the new risk premium, and the new friction. We are in the twilight zone between the two worlds. The smart money is moving now. The insiders are stocking up now. They are front-running the executive order. They are not waiting for the news anchor to tell them that premiums have doubled. By then, it's too late. Let's dig deeper into the concept of the executive order. This is a tool that allows the president to bypass Congress and change the economic reality of the country with the stroke of a pen. It is fast, it is brutal, and it is unpredictable. The market hates uncertainty. When dealers and wholesalers see an executive order looming that targets imports, they pull back. They stop taking risks. They stop ordering. This creates a supply gap. Even if the tariff is delayed or modified, the damage is done because the supply chain has already paused. Ships didn't sail. Planes didn't fly. There is a hole in the pipeline, and that hole will manifest as a shortage on the shelves in February and March. You have to ask yourself, why is the government doing this? Is it just about trade balance? Or is there something deeper? Governments around the world are realizing that strategic resources are running low. Silver is a strategic metal. It is being consumed at a record pace. For the fourth year in a row, the world has used more silver than it has mined. We are in a structural deficit. The above-ground stockpiles are being drained. In this context, a tariff acts as a form of resource nationalism. It is a way to keep resources inside the country, or to punish other countries for holding them. It is a sign that the era of global cooperation is dead. We are entering an era of every nation for itself. And in that era, you want to hold the physical asset, not the paper promise. Think about the psychology of the wait and see approach. This is the most dangerous mindset you can have right now. It is human nature to want confirmation. You want to wait until February 1st to see if it really happens. You want to see if the prices really go up. But in financial markets, by the time you see the confirmation, the opportunity is gone. The market discounts the future. The prices are adjusting right now. The inventory is disappearing right now. If you wait until the event happens, you are providing liquidity for the people who acted early. You are the bag holder who pays the higher price. I want you to visualize what happens to the premiums. A 10% tariff sounds manageable. Okay, so I pay an extra $3 on a $30 coin. No, that is not how it works. The 10% is the base cost, but then you have the cost of financing that tariff. You have the increased insurance cost because the value of the shipment is higher. You have the administrative cost of clearing customs under the new rules. And most importantly, you have the scarcity premium. When dealers know that replacing their stock is going to be difficult, they raise the price on what they currently have. They are not going to sell you a coin for $32 if they know it will cost them $35 to replace it. They will charge you $40. The 10% tariff can easily translate into a 25% or 30% increase in the final street price of the metal. It is a multiplier effect. And what about the paper market? The ETFs? SLV? The people who think they are clever by buying paper silver to avoid the premiums? They are walking into a trap. An ETF is a trust that holds metal in, guess where? London. Most of the silver for the big ETFs is stored in the LBMA vaults in London. If the US government makes it difficult or expensive to move metal from London to the US, the disconnect between the ETF price and the real US price will widen. But more importantly, if there is a true shortage, the ETF will settle in cash. They will write you a check for the paper price, but you won't be able to take that check and buy metal because there won't be any metal or it will be priced double what your check is worth. Paper is a claim on value. Physical is value. In a trade war, you want the value, not the claim. We also need to talk about the sticky demand of the industrial sector again, because this is the factor that makes silver unique. If the price of gold goes to $5,000, people stop buying jewelry. Demand drops. But if the price of silver goes to $100, Apple does not stop making iPhones. The amount of silver in an iPhone is tiny, maybe a few cents or dollars worth. Even if silver triples, it doesn't change the price of the iPhone enough to matter. Apple will pay the price. Solar manufacturers will pay the price. The military will pay the price. This means that industrial demand is sticky. It doesn't fall when prices rise. This creates a floor under the price. It means there is a guaranteed buyer who has deeper pockets than you. When the supply gets squeezed by this tariff, the industry will cannibalize the retail supply. They will buy the 1,000-ounce bars that are usually melted down for coins. The mints will have nothing to work with. The clock is ticking. You have until February 1st, but in reality, you have less time than that. You have until the inventory runs out. You have until the dealer decides to pull his stock from the website to reprice it. We have seen this before. In March 2020, when the pandemic hit, the spot price crashed, but you couldn't find an ounce of silver to save your life. Dealers shut down their websites. The premiums hit 100%. People were begging to buy silver at any price, and there was none. We are approaching a similar event, but this time it is government mandated. It is a supply shock created by executive decree. So, what is the action plan? What should you be doing instead of just worrying? First, you need to audit your position. Do you have enough metal to sleep at night? If the answer is no, you need to act immediately. Do not try to time the dip. In a supply crisis, the price you pay is secondary to the fact that you secured the asset. Better a year too early than a day too late. Second, avoid the exotic stuff. Don't buy numismatics or high-premium collectibles right now. Focus on weight. Get the most ounces for your dollar. Sovereign coins, rounds, bars. The goal is to get physical weight into your possession before the tariff wall goes up. Third, look at the geography of your holdings. If you have unallocated silver in a vault in London, You might want to rethink that. You are holding the asset exactly where the tariff is targeting. You want your metal in your jurisdiction, in your possession, or in a vault that is domestic and allocated. The narrative they will feed you on the news is that these tariffs are good for America. They will say they are protecting jobs, and maybe in the long run, in some sectors, that is true. But in the short term, for the silver investor, it is a chaotic disruption. It is a storm. And you don't stand on the beach arguing about whether the storm is good or bad. You board up your windows and you get to higher ground. The deadline of February 1st is not a suggestion. It is a line in the sand. It marks the boundary between the globalized, free-flowing silver market of the past and the fragmented, tariff-heavy, friction-filled market of the future. In the past, silver flowed like water. In the future, it will flow like molasses, and it will cost you dearly to move it. Imagine waking up on February 2nd. You open your laptop. You check the spot price. It looks stable. Then you go to your favorite dealer. Temporarily unavailable. You check another. Pre-order only. Expected delivery June 2026. You check eBay. The prices are 40% higher than yesterday. That sinking feeling in your stomach? That is the realization that the gate has closed. That is the realization that you are trapped on the wrong side of the trade war. Do not let that be your reality. The warning signs are flashing red. The executive order is drafted. The target list is published. The logic is sound. This is not speculation. This is cause and effect. Tariff on supply hub equals shortage in destination. It is simple math. This is your wake-up call. The system is changing. The rules are changing. The window of opportunity is narrowing with every hour that passes. Don't be the person who watches history happen and says, I saw it coming, but I didn't do anything. Be the person who acted. Be the person who secured their family's wealth before the bureaucrats locked the door. There is a sense of complacency in the West. We are used to getting what we want when we want it. Amazon Prime delivery, instant gratification. We have forgotten what scarcity feels like. We have forgotten what it feels like to be told, no, you can't buy that. We are about to get a harsh lesson in scarcity. The silver market is small. It is tiny compared to the stock market or the bond market. It doesn't take much money to overwhelm it. And when you add a government barrier to the mix, the tiny door gets welded shut. You have the information. You understand the mechanics. You know the date. February 1st. The rest is up to you. Will you be a spectator in your own financial demise, or will you be the architect of your own safety? Take a look at your portfolio. Take a look at your cash. That cash is losing value every day due to inflation. Now, the government is threatening to cut off your escape route into real money. They are threatening to tax your life raft. Does that sound like a system that wants you to be wealthy? Or does that sound like a system that wants you trapped? The move is simple. Trade the paper for the metal. Trade the promise for the reality. Do it while the premiums are still reasonable. Do it while the inventory is still there. Do it before the executive order turns the silver market into a gated community for the elite. This is not just about profit. This is about independence. It is about holding an asset that no president, no executive order, and no tariff can destroy. Once you hold it, it is yours. But you have to get it first, and the clock is ticking louder than ever. February 1st. Mark it, respect it, beat it. The silence from the mainstream media on this specific impact should tell you everything you need to know. They are talking about steel tariffs. They are talking about car tariffs. They are not talking about the monetary metals. Why? Because they don't want to panic. They don't want to run on the banks or run on the vaults. They want you to stay asleep until the deal is done. But you're not asleep. You're here. You're listening. You have the edge. Use it. Don't look back in 6 months and wish you had bought at today's prices. Today's prices might look like the bargain of the century when we are staring at a broken supply chain and a hungry industrial complex devouring every ounce in sight. The friction is coming. The freeze is coming. Get your silver now before the cold wind blows. This is your final boarding call. The gate is closing.